Good morning, Warriors. Dale Pinkert at TradeGATEHub.com. We are sponsored and powered, and we are feeling the power today that the pound does not feel at TradeView Markets. Open a demo and check out the spreads. They're better than your broker. Let me know if they're not. I'll open an account there. So I want to start off with the pound because on Monday I talked about that the pound was the preferred short because of what was happening in Euro pound again pushing higher, and the Euro finally turned lower today, but by 6 pips compared to what's happening in cable, currently down 71 pips. So this blue line is my initial very important level for cable. Comes in around 118-ish, 117.80. That's going to be an important level for the cable to have to hold. If that doesn't happen, then, we're talking about maybe 111.5 or so. So the dollar is making a comeback. I do think eventually the euro will relent, but I want to talk about trade selection quickly, just a little coaching besides analysis. So you could have been right about a bounce in the dollar, and you could have bought the Dixie. It's trying to come out of here. But trade selection is very important. I use the metaphor like singing competitions, like American Idol. So you could have a great voice, which I don't have right now because I have our SVP, our RSV. RSVP is my way of saying I'm answering the invitation and the show must go on. So you could have a great natural voice and make a bad song selection that doesn't really suit you, and it would affect your performance. Well, the same goes with trade selection. So there is song choice, and in trading, it's trade selection. So being right about a bounce in the dollar, you still had to do the analysis if you weren't just trading the dollar itself as to which one would, if you're short, would demonstrate the most weakness, and if you're bullish, which one would generate the most relative strength. So good trade selection this week by Coach on selecting the pound. I think that move is underway. What can you say about the yen? All right, something about December. I actually was on the air on Real Vision yesterday with their currency analyst, Weston, and I asked him why December. And, a lot of people will make the joke, okay, it was, another attack in December. Weston gave me a great answer. He said the JGB markets had become ineffective. Similar to what happened in the UK when the gilt market became distorted and really not tradable. So they had to bring some confidence back to their bond market, and that's why they went ahead with the move. And there was urgency to do it. That was his answer, that they had to do it now. Everyone was expecting this sometime down the road, but not now. I think everyone thought they'd wait until Kuroda left the BOJ before they would make a change in policy. Anyway, so we'll see. The yen, I have to pass on it. I don't know what to do with it, so I'm just going to leave it alone. And I do think that the dollar is in a recovery mode. I think that we could see initially, this 106 level, 108, I think is in the cards. The surprise would be getting through 108 and making a move up towards 112, and the dollar being stronger than just a little bear market rally. We do have a lot of dollar bears here right now. Euro pound continues to perform, and that's why the pound is weaker, and euro is now down 10 pips. I'm looking for a continuation move in this market. This was when we had the it wasn't little, a pension crisis, a gilt crisis in the UK. This is where the pound was at 103. So I don't know if we're going to get there, but I do think that will lead into the 90 area, which means that the pound could be an underperformer for quite some time going forward. Now I see something very interesting shaping up in silver that I want to share with my viewers. You look at this, We have the beginnings of a 3-drive to a top formation. Here's drive 1. We had confirmed highs. Here's drive 2. A little bit over the 70 level. And here we are now. So we turned back from yesterday's high, which did diverge, right? It did diverge. But there still could be another push up towards this 24.5 level, 2460 level. And I don't think this 4-hour is going to confirm it. Here it looks like 70, even if we got to the top of the wedge line. We don't have to get there. But I would say that this is a warning sign. It's your second non-confirmation. Here's your first, and this is going to be your second up here. I don't think the RSI is going to trade much over 70, even if we push up towards this level of 2450 to 70 in the coming days. Back under 2350, you have a problem. And then once this break is underway, this is going to be critical. The $22 level is going to be critical. So I'd be careful with my bullishness. I believe DSI is up to 80, probably ends up higher going into next week. And now I want to talk about the stock market. And really, the elephant in the room is Apple. I talked about it up here, looking for a 140 breakdown. We did have a 140 breakdown, and 130 was my target. I talked about it with Mike a couple of times, and it's going to take closes back under over 140 to arrest this decline. And you're getting the beginnings of this seasonal strength in the S&Ps that I think could take it up to maybe 3960 or so between here and here in the S&Ps. But getting back to Apple, when you look at Apple on a longer term chart, and let's look at a weekly, you have a major ascending triangle top here. So we're holding this major support. Under 130 is a breakdown. So with the seasonal strength that I believe we're going to get, I would use any rally up towards 140 to lighten up on Apple, because the whole universe owns Apple. It's held up better than the rest of the market. People consider it safe money. And a breakdown gives me a minimum target of about 111, 112. And if you really are a believer in technical analysis, then you have to look at this as approximately a $50 formation, and under 130 minus 50 gives you 80, which happens to be the pre-COVID high at 80. So I think that until Apple rights itself, that the market's in trouble. I would use the seasonal strength to lighten up, and aggressive traders to look for short positions. To me, a 3-drive, it looks like a magnet here around 33.5. I think it could happen in January. Doesn't have to wait till March, and could probably generate a pretty good trade. I may be looking at some VIX products at the end of the Santa Claus rally or into early next year. Perhaps I have a line drawn here in the VIX. I think I'll be able to buy it under 20 and put something on for that. WTI is something that I talked about last week on Monday, and on a week ago Monday. And this Monday I said you have to respect how well it's held up with risk off. We have a breakout in crude right here. This is a fairly long-term channel line, or maybe wedge line. And again, if you are a truist when it comes to technical analysis, if this is a falling wedge, it gives the market potential to rally back into the low 90 range, which is where the 200-day would be. And you would think this could support the market. We'll see what the reason for it is, but crude acting okay. We have had a nice little pullback in TLT, and the 10-year still looks poised to push up towards 380. And I'd be looking at maybe right around par or so, trying alongside of bonds. You know, when I look at the candles here in our bond market, this market looks dysfunctional too. We used to have ranges. So you know how you could tell? You want to see if a instrument is liquid, put up a 15-minute chart. And if you have a lot of dots, and it gaps every day. So at least there's, continuous action. If you look at, you really want to look at things that are liquid, maybe you look at something like this, which is a micro cap in silver. So see how you have to make an appointment to do a trade, but global bond markets are starting to act that way, and that's why the BOJ did what it did yesterday. So I'll be back for an interview tomorrow. You're going to like our guest. He's a great analyst, and he was a little off the mark last time I talked to him. I want to see what he's thinking here. Keep an eye out on this silver, and you never go broke taking profits. If you get this rally in silver back up here, in fact, I'd already be thinking about taking it off, and aggressive traders, there could be a nice short. Hard to find a silver bear out there anywhere. And with that being said, don't just count your pips, count your blessings. Merry Christmas to all those out there in their endeavor to become a trader and make a living out of doing this. I applaud you. It's not an easy thing to do. Hope that we're adding value to your mission. And don't just count your pips, count your blessings. Merry Christmas, everybody. Look forward to continuing to invite you to join us here at TradeGATEHub and